Hey everyone! Today we're talking about two powerful concepts in finance that can make a big impact on how businesses operate and make profits: operating leverage and financial leverage. Understanding these can help you see how companies use their resources and manage risks to maximize their returns. Ready to get started? Let's break it down. Operating leverage. First up, let's talk about operating leverage. This is all about how a company's fixed and variable costs affect its profits when sales change. Here's the scoop: fixed costs versus variable costs. Fixed costs are expenses that don't change with the level of production, like rent or salaries. Variable costs, on the other hand, fluctuate with production levels, like raw materials or hourly wages. How it works. If a company has high operating leverage, it means it has a lot of fixed costs relative to its variable costs. When sales go up, the company makes more profit because it can spread those fixed costs over more units. But if sales drop, the company might suffer more because those fixed costs don't go away. Example: imagine a factory that has to pay $10,000 a month in rent, fixed cost, and $5 per unit in variable costs. If it sells 1,000 units, its total cost is $15,000, $10,000 plus $5,000. If it sells 2,000 units, the total cost only goes up to $20,000. The fixed cost is spread out more, so the profit margin improves with higher sales. But if sales drop, the fixed costs remain the same, which can hurt profits. Financial leverage. Next, let's dive into financial leverage. This concept is all about how a company uses debt to finance its operations and how that affects its returns. Debt versus equity. Financial leverage involves using borrowed money, debt, to fund business operations and investments, instead of relying solely on shareholder equity. The idea is that using debt can amplify returns on equity, but it also increases risk. How it works. If a company has financial leverage, it means it's using debt to increase its potential returns. When things go well, the returns can be much higher because the company is using less of its own money and more borrowed funds. But if things go poorly, the company has to pay interest on that debt, which can lead to higher losses. Example: suppose a company takes out a loan to invest in a new project. If the project generates higher returns than the cost of the loan, the company benefits more than if it had just used its own funds. But if the project fails, the company still has to repay the loan, which can be risky. Now, let's put it all together with combined leverage. This combines both operating and financial leverage to see the overall effect on a company's profitability and risk. When you combine operating and financial leverage, you're looking at how both fixed costs and debt impact profits. High operating leverage means that changes in sales significantly affect profits, and high financial leverage means that using debt amplifies those effects. The combined leverage effect shows how a company's overall leverage, both operational and financial, affects its bottom line. It helps in understanding the total risk and return profile of the company. For example, if a company has high operating leverage, meaning lots of fixed costs, and also uses a lot of debt, meaning high financial leverage, it can experience dramatic swings in profitability. If sales go up, profits can soar, but if sales go down, the company can face significant financial stress due to both fixed costs and debt obligations. To sum it all up, operating leverage focuses on how fixed costs versus variable costs impact profit margins when sales change. Financial leverage is about using debt to enhance returns and the risk associated with that. Combined leverage looks at how both operating and financial leverage together affect overall profitability and risk. Understanding these concepts helps businesses make informed decisions about their cost structures and financing strategies. If you found this video helpful, make sure to like, subscribe, and hit the bell icon for more insights. Drop any questions or comments below, and I'll see you in the next video. Thanks for watching.